Hey everybody, this is Dave, D-R-E-B-G, talking to you on Saturday morning, February 20th at 6:45 a.m. Figured the house was quiet and be a good time to make a quick video of some trades I took this week. What you're looking at is the hourly chart on the British Pound Futures. And what you're going to notice is this small area of consolidation here, and then a rundown this past week, Wednesday through Friday. And these four red bars are the trades that I took. Very simple. They're all on the 5-minute chart, but I want to zoom in a little bit and give you an idea of why it is I took them and what I did to make the trades. They're all successful. They all went exactly as planned. And again, this is more honing of exactly how I'm trying to make this volume analysis work. So I'm going to pan over here and you'll start to see this stuff zoom in, and the first one would be right here on the 5-minute, and we're just going to look at some candlestick patterns as well as some volume spikes. And the first one, if I can get it right here, is this one right here, and I'm just going to get rid of this line and show you what I did. I saw this spike form. And it's obviously a fairly big candle, and obviously relative to the prior volume, a pretty big spike. And I went up, and when I see these things, what I've been doing lately is just drawing a fib extension along with a retracement, all in one. So when I see this, I just take the most recent swing high, and I drag it down to the low, and I try to look for a good entry point short. So in other words, we saw a big volume spike, which means there's some interest in selling. So I figure if we're going to have some sort of a retrace, what's a good area to come back to? Well, this is my 21 EMA, this is my 200, this is an 8. And usually, from what I've been finding, is that a pullback to the 382 or the 50 is a pretty good area to get in. In this case, we pulled back to the 50. I entered short here at 57.40, I think it's more like 57.45, a little right around here. And then what I do is I use the fib extensions as an idea of where I think price action might get to. In this case, I got out right around the 56.90 area. So you can see that we're talking about a good 50 pip plus run here just by doing a quick Fibonacci analysis off of volume spike on a big down candle on the 5-minute chart. So that was pretty much it. And then what I've done is, if we move along to the next one, I just did it again. Every time we kind of have an idea of where there might be a spike or some volume change, we just run the numbers and see what we come up with. So if you look at this one, same type of thing. We have this big spike here with a rundown, which tells me that maybe we'll have some more downside pressure. Well, when I draw my fibs out, again, you were talking about seeing some sort of a spike and then kind of seeing where the swings end. When I fib this thing out, from the top to the bottom, we're basically looking again for somewhere to get short, because there's some volume spikes on some pretty good down moves. In this case, we went up all the way to the 78.6. I get in somewhere around the 50, which is the 55.95 level. And you can see that this went back on me. Not far. We're only talking about 20 pips or so, give or take. But when we look farther down the line, you'll see that the Fibonacci extensions start to come into play, and I usually shoot for the first or second fib level. In this case, when I hit the first fib level, I got out. In this case, it was actually just before it hit, and I think we ended up getting out 55.63. So you can see that, again, fibs help us get in, and then the fib extensions help us get out. All based on volume analysis, all based on candlesticks, no MACD, no Stokes, no nothing. And it seems to be working out okay. Not all the time. These trades did. I didn't have any that didn't work out. I didn't do a lot this week. I just kind of left it up, and when I saw something happening, I'd hop on and see if there's something I could take advantage of. The next one you'll see coming up is same thing, pretty much in the same direction. This one was a little bit different. The reason is you'll see the candle was just stupid. It's huge. I mean, look at this thing. There's obviously something going on here. huge spike and a huge hammer candle. I mean, this is just crazy. And here, all I did is this is similar to what you may have seen me do in the past, which is enter halfway down this type of hammer setup. And when you enter halfway down a pin like this on the opposite direction, you get a pretty good shot about having this thing go the other way. And there's no fib to draw here. It's just you have this gigantic candle, and obviously what is price action coming all the way down and then having so much interest at the bottom that it ends up closing way up here. There's no reason why you wouldn't want to at least let it retrace a little bit and then see if you can get a long out of it. And that's exactly what I did here. No real rhyme or reason from analysis here. It's just a matter of getting in somewhere down half. I think we got in a little bit above half the rundown of the spike, and then we just rode this thing up. And again, I did draw the fib extensions just to get an idea of where to get out. And when you draw it on this, I just drew it from the swing high, swing low, and again, I just look for the first or second fib extensions, and those get us. Oh, what did it get us out here? Oh no, I'm sorry. I remember this one. I get out because things started turning around. Hold on a minute. Yeah, I remember this hammer here got me a little scared, so we ended up just getting out. It was a very small run. It's like 53.70, somewhere around 53.90. It was like a 20 pip run. I didn't like this hammer on this somewhat higher volume relative to what had been going on. So that one didn't quite go to the fib extension levels that we like to see. But again, it also didn't get me in with those fib extensions either. It just allowed me to see a huge pin candle and play it halfway down in the opposite direction. And the last one, if I can remember here, is this one. Yeah, this was yesterday. I marked these ahead of time, so you have to bear with me so I can get the video done in a more efficient way. This one was as basic as it gets. Same type of setup where we see a pretty good volume spike on some up volume, increasing volume I should say. And when you draw this out again, we just drew it from top to bottom, most recent swing from here to the top after we see the spike. And that tells us here's a neat idea or a way of getting in short. And you'll see that we get it, getting in long. And in this way, we were able to get in right around the 38.2, just above in my case. And we just looked for the first or second fib extension. And here's the first one, and here's the second one, and we got out. That was it. No real, brain surgery here. No real indicator analysis of any kind. Just simple volume analysis and where we think sentiment's going to go on a very short time frame. And the nice part about these is you can really use money management on a highly leveraged level because you're not really risking that much. In this case, when you draw these fibs out, and draw it one more time, what you're doing is you're saying, I'm getting in at the 382 or the 50, let's say. And that means your stop loss can be, somewhere below the 61.8, which leaves you with very, very small stop loss. 53.96 to 16, maybe 54.16, 54.26 maybe. So, we're not talking about a lot of downside, but the potential is usually 1 to 2 as far as risk to reward. And usually worth taking, and you can really move the stop loss up fairly quickly to break even and let it ride. So that's it for now. Those are some trades that we're taking this week. Again, these are still demo, guys. This isn't real money yet, and I want to make that clear. But they were taken. I took them on the MetaTrader platform, so I'm still getting used to TOS. But this seems to be working out pretty well for me, where we find some sort of run up, and you draw the fibs for where you think you might want to get in, usually the opposite way or in the same direction for that matter, of what the volume is telling you. and the extensions kind of give us an idea of where we can get out. Very short-term moves, quick get in, get out, and usually you can do it fairly highly leveraged with small stops. So I hope that helps, and I hope everyone has a great week coming up. Thanks again, and I'll post something else soon.